Welcome to Fintech. What the heck? I'm your host, Andrew Carpenter. This is the podcast all about fintech and the future of data. I'll be interviewing Intrinio's senior data engineer, Phil Vigo, about managing data quality. We're also talking to Hugo Castalan and Alex Mathé-Cathala from Lifeworks Advisors about combining Roboadvisors with human advisors. My Intrinio guest today is Phil Vigo. He's a senior data engineer at Intrinio. Welcome to the podcast, Phil.
Thanks for having me on.
Yeah, my pleasure. Can you start by telling everyone a little bit about your personal background and how you came to be at Intrinio?
Sure. I've worked a number of different types of jobs for many, many years. I've been a rice field agricultural technician. I've worked in grocery stores, worked at a VHS video store when I was way younger. And then got serious about my career, went to college and got some math and dropped out. And I've been working with data pretty much ever since. I came to Intrinio after a disaster hit my community, and I was looking for a job. And Intrinio looked like a really good opportunity, so I applied, and now almost 3 years later, I'm here.
You're here and you haven't quit. And could probably have a whole podcast just on your background. But maybe tell us a little bit more about what it means to be a senior data engineer at Intrinio. Like, what type of things are you working on a daily basis?
Right. So a lot of what I do requires a great deal of curiosity. I run into things I never see on a daily basis. And the joke I used to make was that I basically get paid a lot of money to play Sudoku all day. But I think that I've got a better way to describe it now. Essentially, the work we do is if you were to have a library and you wanted a robot to read all the books and then tell you where he thinks or she thinks it should go onto a shelf, then it doesn't always get it right. So you have to train the robot to be able to shelve a book correctly. That's a lot of what I do, only abstract that into financial data. We get fundamentals in from a wide variety of sectors. They all have their own way of doing things. The robot goes and tries to figure it out. It doesn't always get it right. Data quality engineers, we go through and try to make that better.
Yeah. So you're training a machine to do the work because it's probably scales a little better. Do you have a name for this robot that you're helping?
Well, I don't know if I'm allowed to use it because we internally we use like funny names for the different strategies and stuff. So I'll just call it engine. I think that's what the engineers I work with would call it. But yeah, it's just basically a very powerful system that has a wide variety of different outlooks it would take to determine which one it should use to standardize the data.
Right. And so the idea is that this you could have a whole bunch of people who don't have a ton of skill go and shelve the books, or you could have the robot do it and have a very small team with a lot of knowledge that works with the robot instead.
Right. And what's great about our programmers is that they all, for the most part, know a bit about financial data before they got here. A lot of them trade in themselves. They sell and trade stock. And so they understand the importance of why this data is so useful. And so they're really good at training the robots ahead of time before, someone like me who actually knows very little about it. That's what's so amazing about it is that even though I'm not a financial person, I can still use what is left over and figure out what to do with it.
Yeah. Can you talk a little bit more in depth about why that data needs to be worked with between, you're working a lot with financial statement data. Like, why can't people just go and get that data native from the SEC or in the wild? Why do we need to have this robot in between that makes that data more useful?
Sure. So, I mean, all of this is publicly, available information, and all of it is, you know, filed under XBRL code or XBRL language, and um, and so if you wanted to, you could go to the SEC and plug in a company one at a time, pull up every single filing one at a time, and it would take you, forever to be able to pull that information down in a reasonable amount of time. And what we can do instead is we can pull all of that data and standardize it and put it into a format that's easily digestible so that somebody can compare apples to apples with seemingly unrelated companies in a matter of a simple query. Whereas if you were to just do it through the SEC, you'd probably have like 400 tabs open trying to figure out which one to go to. And I mean, and when you're thinking about trying to do this at scale, there's just no way to do that. I mean, maybe you could go on someone's website and hope to God they've got it right, but it really isn't, very easy to do without having someone come in, take the data, interpret it, and then put it into a standard form. And that's the other thing that's really great about what we do is that we have a couple of different templates we use to allow you to take something that would seemingly be unrelated from different sectors of the market, and be able to compare them on the same types of tags like revenues and expenses, and compare their fundamentals across to try to find patterns or something so you can make a more intelligent trade, or give it to a customer with your analysis.
If you wanted to do it manually, take one company at a time, you're going to spend most of your research time standardization piece that having you and this robot in between makes it possible to just get so many more comparisons done, almost to the level of automating analysis. Can you talk about some of the tougher companies to standardize? Like, what's going on with some of these crazy filings, and like, what have you seen in the data?
Yeah, a good example of a challenge is any company that buys at a lot of other companies. So think of like an energy company on the East Coast. They're all owned by like only a small handful of businesses. And whenever they buy a bunch of different companies, they have to file for all those companies. And all those other companies, they
Hmm.
have different fiscal years, and they have different, so that they do what's called dimensionalization. And the dimensions that come out of that, they contribute to the overarching top line and bottom lines on all the different filings that come through. And so keeping straight, like say you have an energy company that has 40 subsidiaries and they all have revenues, and maybe like a couple of them matter to the overarching top line. Keeping all of that straight is very challenging. And what's really cool about it, really cool about it is that we actually have some strategies now that are really good at taking the sort of like guidance we've given the robot, and they can do it almost instantaneously now. It used to be something we'd be sitting there and just like picking at and trying to figure out, and it's like that hard work has now gone into making those robots more smart.
Yeah. So these filings, they're a mess, I imagine, when and you're going in there, diving into the data and applying experience and not just fixing it for that one filing that one time. When you go ahead and understand these statements and figure out how to standardize them, will they be mapped in the future to that standardized template?
In the future and the past, we have ways of basically taking anything that the system has struggled on in the past, and we can run these strategies on them, and we can audit ones that are already standardized and see if we did them correctly. So we're constantly improving the data. We're constantly trying to find the cleanest, most useful, actionable data that you can get.
Yeah. And so anybody who's using that data is getting the benefit of having a team of data engineers um, always running their analysis off of. What are you working on next? Like, do you see as the next step to continuing to improve these data sets?
Well, I'm working with Jason on getting the next level of the validator done. The validator is a program we use to analyze the standardization to see if there's anything weird going on in the filing. And so I've been working with him on strategies regarding that. And then from there, we're also looking at standardizing data for foreign markets using IFRS taxonomies. So anything that files in Europe or across the world, we're really excited about the possibility of getting into standardizing that data, because it's a field we really haven't really dove into. So it's a really cool future.
Yeah. So you could be expanding outside of the US and using the same approach to standardize filings across the globe.
Yep.
I was thinking about that idea this morning and thinking how if you had standardized templates that went across countries, you could really open up the investable universe for folks so they could pick better investments regardless of the market. Whereas I think right now a lot of their their investable universe is limited because you don't have standardized data for Europe or Asia, for example.
Yep, that's exactly right. And I mean, we've sort of staked our claim on U.S. companies specifically, but we've also more recently expanded into American depository ADRs. I always forget what the R means, but you know what I mean. Just basically foreign filers who trade in the United States. Um, we that's sort of like one of the bases for helping us get this off the ground because they do file things very differently than they do here. They still follow, our regulations, but you know, a German bank will often be very different than a US bank.
Right. Okay. So you're using the ADR information that we've been covering in the United States, taking some of that information and then expanding outwards.
Hmm.
That's really cool. Do you enjoy working with all this data? I mean, you said it was like a puzzle for you. It's like, does it keep your brain working all the time?
The best answer to this is most of the time. Um, we're a small company. We've overcome a lot of really big challenges. This isn't a simple problem to solve. And so, you run into some things that make it a little more difficult. But overall, like when it's humming and I'm just like just solving these left and right, or even better, when I'm working with somebody who's dedicated, who understands this stuff really well, it can like take big whacks at at it. That's the best, especially when we start to see like the strategy we created this summer. The data quality, the leap it took was just immense, and that feels really really satisfying. Like especially being here in almost 3 years, not quitting. Seeing how all this has happened over time has been incredible to be a part of.
Yeah. That's good to hear that you like it and that when you make progress, it's thing in your head against it. I like one of the values that I think you really live out is work smarter, not harder. Finding these solutions that can make a big impact. Um, it's really helpful. Can you tell us what you're doing for fun outside of work? I could ask you about music. I could ask you about composition, video games, all kinds of things. I got some new John Denver music that I didn't know about from you recently. What are you into right now besides work?
So my birthday's right around the corner, and I think that my family's gotten to the point where they don't really get me anything. They're just like, "What's Dad gonna buy this year?" So this year I bought a keyboard, and I'm learning piano right now. So that's been really fun. I've played guitar since I was 13, so I'm almost 30 years on the guitar, not quite that long. And now I'm expanding to the piano finally because I mean, it was gonna happen eventually.
What are you gonna do with that with your piano once you get good at it? Or do you like to compose? Do you like to just learn songs you enjoy?
Yeah, well, right now it's just learning basic, technique. I don't really understand. Like my hands are killing me because I didn't realize like you hold them a certain way. I mean, I always could screw around on a piano, but like not like I'm doing now. I actually have a book. It has notes. I have to like, this finger pushes that note, whatever. But it also has like the one I got has the ability to help me compose like demos. I don't have a band, and in the age of COVID, I don't want to like find a bunch of people to get in a room together and breathe on each other. So the keyboard kind of has a way of allowing me to like put a beat down, and then I can record a loop and then put it on my computer and edit it. And so yeah, sort of like want to get into composition, and I used to do it when I was younger, and so it's just getting back into it.
Yeah, well, I can't wait to hear what you compose and how you make progress on that, and also what you come up with and compose for Intrinio on the data engineering front. Thanks so much for coming to the show, Phil. It was a real
Thanks
pleasure.
for having me. It was a pleasure.
Um, so I'm from France, based in New York City. I joined Lifeworks a year ago, and before that, I was starting a company with Alex called Aimvest out of MIT. So I met this guy, what is it, like 2, 3 years ago now, at MIT. And so my background is is data and kind of like financial engineering in general. And at Lifeworks, I'm in charge of data science, but really for like a young startup like this, data science means a lot of things. It's like investment strategy research, planning software, performance reporting, all that kind of stuff. Whenever there is data, I'm usually involved.
Yeah. And how about you, Alex?
So same France as well, another French guy. Didn't meet Hugo in France indeed. We met only in grad school in the US in Boston. I come from a background which is a lot more, I would say, traditional or conventional than Hugo. I really don't come from the entrepreneurship world or tech world. So more like your typical, math slash history type of
Is that
education
typical?
and yeah, and like no startup work at all before meeting Hugo and starting one. Today at Lifeworks, I'm in charge of designing and maintaining and communicating around our investment strategies. So investment, I would say VP of investment strategies.
Yeah. So why don't you just tell the audience a little bit about what makes LifeWorks Advisors different? Like, why do your users come to you?
Absolutely. So maybe right before we talk about LifeWorks, one thing that would be interesting for you to know is what the startup that we built was, because there is a huge overlap between what we were trying to achieve with Hugo on our own before that little startup that we've built was acquired by LifeWorks. So the broad idea is that since the middle of the past century, or at least the 1950s or 60s, like the investment industry has been working around the same pillars, and there hasn't been any like critical or groundbreaking innovation on the investment front. So you've had a lot of innovation on the tech side, like the way things are being packaged is much better now. You know, you can invest using your phone. You don't have to call your broker and buy stocks. However, on the pure investment strategy side, people have been doing the same. And when I say people, I mean advisors, for example, for individual investors. Advisors and individual investors have been doing the same for 60 years. That is, you give your client, your individual client, a questionnaire, a risk questionnaire, and through this questionnaire, you're trying to figure out the risk tolerance of that client, which ends up being a number, let's say a 6 out of 10, like on a range. And based on that number, you would assign a portfolio with a certain risk, like a certain risk loading to it, that is deemed to be appropriate to that risk number. So that broad idea is basically what everybody has been doing for so many decades. And with Hugo, we felt like every industry needs to be disrupted at some point. Like, you need to make progress, especially when technology has made so much progress. And the idea behind Aimvest and the problem that we solved is really this one. Like, how can you go to an investor, either as an advisor or as an investment fund manager or anyone? How do you go to that person and really figure out what type of risk they should have in their portfolio that would be appropriate to their economic life? That is, this guy is going to be a retiree, or this guy is trying to buy a house in 10 years. How do you use those variables and how do you quantify them to have a portfolio that is more than 60% stocks and 40% bonds, because you are a risk score of 6 out of 10 that is set and that you just watch forever. And so we invented that kind of product at Aimvest, where you could call it a customized structured product, where given your the maturity of your goal, really your investment goal, let's say for retirement or buying a house, and the amount that you expect to spend and the amount that you expect to earn in between, then you would have an optimal portfolio, and that would be dynamically rebalanced. Basically, this is Aimvest. And on the other end, Lifeworks was, so Aimvest is this tech, and Lifeworks was an advisory company. So with advisors that were facing this same problem, the risk questionnaire problem, and they realized that there was an overlap between the problem that they were trying to solve, because they were realizing that the questionnaires were a nightmare, like they were a joke, and they were trying to figure out a solution, and ourselves that had the solution. And so we brought those together. And to answer your question, and I'll finish here, why are people coming to Lifeworks? It's really because, people come to Lifeworks because we have that, the way we talk about investment is really related to financial planning, because we have a solution that takes their planning data. So in how many years are you gonna buy a house? In how many years are you gonna retire? And we give them back a portfolio that is customized to those inputs. And that's really like the main differentiator of Lifeworks today.
And when you started out building Aimvest, were you planning for that? Were you planning to have the software be acquired, or did that just kind of happen? What was that process like?
Yeah, that really kind of happened. Really wasn't the plan. I guess about a year and a half ago, we had three avenues. The first one being continue building the software on our own, raising some capital and growing our client base, which is the normal, like the standard avenue when you are an entrepreneur trying to build a startup. The second avenue, we had an opportunity to join an incubator by Barclays in New York City. So Barclays, this big bank, would have bought a chunk of our own company and also provided us with a lot of resources, which was pretty exciting. And the third one, which came really out of the blue, was Lifeworks' offer. And so we were part, as a startup, we were part of an accelerator the summer before, and we had a demo day where we demoed our idea and our technology. And the CEO of Lifeworks actually ran across that video, I guess. And so he got in touch, and we really realized what I just told you before in the previous question, that we were coming to the same problem from different angles. And so it made a lot of sense to merge the companies and take advantage of the synergies. And in if I remember correctly, in 2 or 3 weeks, we had never met this guy, we had never met the shareholders of Lifeworks, and in a very short period of time, the company, the startup was sold, and we joined them because it made so much sense.
It was the middle of COVID, basically.
Wow. So it was a surprise. What a pleasant surprise to find out that your tech that you were building was valuable and other folks thought that it could be super useful. I'm kind of familiar with the history of how portfolio advising was not that nuanced. It's just we'll give you some bonds or some stocks. You more conservative, more bonds. Less conservative, more stocks. And it's not that sophisticated. But it seems like data science has really made a difference here. You can do better job of helping folks have the right portfolio. How are you using data science and all the data that's available now that wasn't available in the past to make that process more sophisticated?
Yeah, so I think the way we use data science can be broken down into two parts. On one hand, you have, to me, the investment creation, so where you're going to build your strategy. And those tools they've been there for a while, quantitative strategies have been around for 20, 30 years. But nowadays they are extremely accessible. So if we look at the data that we need to build one, Intrinio comes in. That's a very easy, to integrate API. It's simple. The tools, the coding, the library, all of that also becomes more and more available to everybody. So that to create robust and customizable strategies that are not, so basically here I'm saying that are not stock picking, your advisors, they will pick a couple of stocks or just randomly assign a mix of equity and bonds to your portfolio. So that's the tools are here in data science, but they've been here kind of. I think where the data science becomes very interesting, in the last maybe 5 years, let's say, It's on the other side when it comes to understanding the client and being able to generate that planning input that is necessary to come to the right portfolio, right? You have like, I think I'm a big believer, for example, of like all the banking, the open banking, all those open APIs that allow us to really get a comprehensive picture of the client. Because if we don't have that information, there is no way we can actually build the appropriate portfolio, right? If we don't understand like the different loans that a client has in their next 20 years, we can do like any type of quantitative strategy, it doesn't matter, right? So data science to me, like really that aspect of understanding the client, there is a lot of tools that are being created everywhere. And I mean, open banking, like the platform like Yodlee or Play, they're like all examples, but there is other, aspects to it. So that's to me, like to come up with the right strategy, that's data science has made huge progress there, but there's still a lot of work in making that link between planning and investing.
Yeah, and it's almost like a human factor to get the right information from the clients and then use the data science approach, say, based on what's
Right.
actually happening in your life. Do you find it's hard to get that information from clients, or are they very willing to share the right information?
Yeah, it's a collaborative process, right? The advisor work on it, the client works on it, and I think that's also one nuance that we didn't mention. But Lifeworks is special in a way that we're kind of building a robo-advisor, but you have a human advisor, right? And to address that issue, I think that's very important. Extracting, I mean, are they willing? I think yes, they're willing. They're eager to get investment solutions that actually match their needs. I think the issue has been how hard it is to actually communicate like precisely your financial situation in like a standardized data structure. Like it's been very, very idiosyncratic up until that point. Like the client has the discussion with an advisor and describe like some kind of product that they own or their house, but then there is not much we can do with it because that's just in the head of the advisor, right? And all those kind of API that's starting to emerge, and clients just are more and more willing to share data because they understand that this is part of the process to get better customer service. I think we're getting there.
Yeah, that's been my experience, is that if you combine artificial intelligence, machine learning, and data science with a person, like you pair them together, it's way better than either on their own. Like it doesn't, now that I'm listening to you talk about it, it doesn't really make sense to me that you would talk to a robot alone, just like a purely robotic approach to investing. How could that ever fit the broad diversity of lives that need retirement strategies?
There is a huge piece there for sure. The human is, there's been like this first wave of robo-advisors that are become very successful, and we know them. It's like Acorns, Betterment, all of them, Wealthfront, which are probably the best option for someone that has a very simple financial situation. So that's your like 25, 30-year-old working, no particular, maybe like a real estate asset, but no particular like stuff that is complicated to model, right? But most people are not in that situation. Like most people start to look at retirement. They have very different like sources of income for retirement. It gets very complicated, and even though like it's a myopic like world where we would have everything integrated into like a software like Wealthfront that can just do everything. I think it's going to be extremely hard to get to that point because you actually do need like the human being to have apply some kind of like filter and make it possible.
Yeah, it almost feels, I look at my own behavior and thoughts for the last 10 years and I almost feel naive. Like I could just have a robot do everything and it would be fine. And it makes so much sense to me that you would combine the two. So what is next? I mean, what are you where's this industry going if we're injecting a little bit of an advisor and a human factor, and that's really making a positive difference when you combine it with the tech? What is Lifeworks Advisors going to build next to take it to the next level?
At our company, I think we have obviously solving this this map that needs to be created between planning and investing is a huge thing that we are like resolving, and we come up with a solution. But we need to, so advisors, it still costs them time to go through one client and, understand that client, build a relationship, and be able to service them like as they should. And so for Lifeworks, one of the key value creation that maybe has not been mentioned like by Alex in the first round is that we are allowing advisors to serve more clients while keeping the same type of customer service that you would expect when you go see an advisor. And that goes through, so now we're out of the kind of financial planning and investment management, but we enter kind of the operational side for financial advisors. Because obviously one big bottleneck in this industry has been that one advisor alone can only manage so many clients, right? Maybe they can have like 50, 100 clients, but if they start having 200 clients, then everything we just talked about becomes irrelevant, right? Because they just don't have time to understand the clients. And so for us, the way we can have the most impact and still do this is allow the advisor to expand their reach by making all their processes more efficient. We really kind of bring scale to the advisory business without removing the human part. I think that's one of the core mission of Lifeworks, and what's definitely next for a long time, I think, because that's an ambitious mission. I don't know, Alex, if you want to add on top of that. We are, like, to that regards, we are like planning to have almost everything that an advisor needs to do to run their business on the same platform, for example. So I think right now, like the average advisor, I think Alex know that maybe, but how many platforms do they use? Like 8 or 10 platforms on average they use?
8 and 12 pieces of
right.
software.
Yeah, so it's an operational like mess, right? They just use different software that don't combine well together. They are constantly shifting from one to another. Just takes time, right? We are combining all of that into one software that has, so we are like completing integration with Apex, the clearinghouse and the custodian. And we're going to have, digital account opening, automating rebalancing, planning, all those tools like within the same platform to really make that super efficient. So they can actually like come to, instead of doing 50 or 100 clients, they can take on 200 clients and still spend the time that they need to provide the financial advice.
Yeah, the artificial intelligence and data science piece scales, as far as you need it to scale, but that the human component, that relationship piece, that doesn't scale. And I imagine if you had better tools for the advisors, they could focus on the relationship and actually spend time thinking about the client's needs and figuring out what the best choice is for them instead of logging in to all those 12 different.
Yeah, absolutely. And even they shouldn't spend time thinking about what investment strategy they are using, right? It's not their, in a way, it's not their job. It's not what they've been like prepared to do. So they really need to be able to focus on the human aspect, like you just said. And that's how they create the most value, and that's how they gain scale. And that's what we're trying to let them do.
And do you think that applies more broadly across fintech, that like the service and operation side of actually giving a good experience to customers is kind of the next frontier for these tech companies across fintech that have, they've got software, they've got data science, and they do you think that applies more broadly?
Yeah. I mean, I think there's been like a phase, I think, of just adding scale, and we've reached a point where those companies it's becoming a commodity, right? The Roboadvisor business is a commodity today. It's a race to zero fee. They're all providing the same thing. So I think, yes, like broadly, people and the companies will start to look for how do we add like a better customer service, a better customer experience, especially like when data science is making things very scalable and very commoditized in a way.
Yeah, it's that human factor. I don't like that when I work with a company and I get treated like I'm also a robot. That's not a good experience for me.
There's definitely some industry where like the human factor is not gonna it's not going to play much of a role. But I think in our particular industry, the financial advisory business, it's a huge component.
Yeah.
Yeah.
We think about onboarding clients and the client experience all the time at Intrinio. So if someone wants to try Lifeworks Advisors and see what that, having like a robo advisor combined with an advisor who understands your needs, if they wanted to try that, how do they get started? I've got your website here. It's lifeworksadvisors.com. But like, what is that experience like if they want to try it out and see what it's like?
Yeah, basically the way people mostly hear about us is either through referral. So they already, like, they have a friend that is a client of Lifeworks that's gonna introduce them to us and hopefully say good things. And the other way is digital marketing that we do a lot. So we go on a webinar and someone from Lifeworks is going to tell you a longer story than we've told you today, but that's gonna bring a prospect or a future client to us. And the day they arrive, and that's something you could find on our website, is the first thing they're gonna have is an appointment, a meeting with one of the advisors of Lifeworks. So the very first interaction is a human interaction. From what I've seen, because like Hugo and I are not on the advisory side, right? We are here to support the advisors, but we've had a lot of opportunities to attend like meetings between advisors and clients. And from what we've seen, like the very first meeting between the advisor and you, Andrew, let's say, is going to be a lot about your own personal life. And I've been like almost shocked at how much people open up and how much they tell about what they own, how much they make, how much they expect to make, how much they expect to spend. And that is absolutely necessary for the person to feel that the advisor has all the tools in the toolbox to help them out. And only when you have had this human interaction and when we've had a complete picture of your economic life and even personal life, then you can try out. We have this smartphone app, web app, and you can onboard, you can try. And most of the time, people don't start by bringing assets over. So they just want to try out planning, they just want to see how the app is going to help them plan for their future inflows and outflows, and they want to get advice from the advisor. But like 2 months, 3 months down the road, they will most of the time bring their assets over to Lifeworks to get these assets managed once they've tried the planning side. And then the investment strategy work comes in, and we use our software and our risk assessment methodologies to invest those in the market.
Yeah, it's definitely a more human process, even though we do have you can become a client of Lifeworks digitally. Like that's something a traditional advisor, the only way you can access the advisor is, you have to, get an appointment, get a call, so they can make sure that you have enough money, basically. And then, then you can hopefully get started. For us, we do digital account opening, and very soon, within a day, you'll have an account open, at a custodian ready to invest. That's something that's very different from, it's like that hybrid model between the robo-advisor onboarding process and then the traditional onboarding process of an advisor. We're kind of trying to be in the middle, bring the best of both worlds, I guess.
Yeah, I love that approach. I love that you talk first and get to know them before you stick them in 60% stocks, 40% bond ETFs, and we'll never talk to you again.
Yeah.
From what I know about people, I guess I shouldn't be surprised that if someone's willing to listen, they want to share and talk. Most people love when someone listens to them or cares and is there to help them. And I think that historically you've had to choose. You've either got an advisor who doesn't have the best tools, doesn't have the technology and data science to actually invest really effectively. You either go to that advisor who's going to listen and care, but they maybe can't invest as effectively, or you don't have anyone who cares about you. You just have the automated investing. And so getting started with Lifeworks sounds like I would have a lot of confidence knowing that I've got both, technology, smart folks behind the scenes, and a person who cares and understands my situation. Yeah, I love it. So that's lifeworksadvisors.com. Yeah, it looks like you can chat, you can set up a meeting, it's all there. Do you both work remotely for Lifeworks Advisors? I suppose with the pandemic, you've probably had to. What's that been like? This is kind of less about the business and more just about like how you're handling the challenges of being dispersed. I mean, I guess it comes naturally if you can open accounts remotely and be a technology company, but has the pandemic made it easy or harder to be working on these technology problems?
I think much harder. So the company is in Michigan. I'm in New York. Alex is in France. So I don't have it too bad because I'm on the same time frame. But I think it becomes very hard to really collaborate effectively if you're working remotely. That's at least my experience. And I go to Michigan at least once a month, and I really benefit from being able to meet in person with the developers and our team and the CEO and all of that. I think that's super important to me. And Alex has another story because he's very remote in France.
Yeah, I'm working on a 6-hour time difference, so all day, every day, which is adding a layer of complexity, I would say, to what Hugo mentioned. And I would second really what Hugo said to me as well. Like not being able to gather in a room with someone when you're trying to solve sometimes you really do have to solve tough problems. And when you can't get people's body language type of feedback, that really is a pain sometimes. So the pandemic has had a lot of benefits, like allowing you to work from home and seeing family and seeing the old friends that I have in France. So that is great. But on the other hand, I wish sometimes I was typically with Hugo in an office room and the other guys on the tech team and being able to chat more efficiently.
Yeah, when I do development work or writing work, kind of like heads down, deep work, I love being remote. There's no distractions. I can control my environment. But when I want to be creative and collaborative, which you when you're in a fintech company, you always have to be innovating. You have to be building new things and discussing and throwing ideas around. That is such a challenge to do remotely when you're not in the same room. And like even on this call, your internet's down, your internet's up. It's like there's always some challenge.
You've been frozen for the last 10 minutes, so yeah.
Yeah. So even doing an interview can be hard. So I give you a lot of credit for continuing to put out new features and innovate for your clients, even remotely. Super excited to see what comes next for Lifeworks and the future of investing in this kind of dual approach with an advisor and technology. So thank you so much for being on the show today, Hugo and Alex. It was an absolute pleasure.
Thank you for joining me for this episode of FinTech What the Heck. Thanks to our sponsor, Intrinio, a financial data partner for innovators in finance. You can learn more at intrinio.com. I'm Andrew Carpenter, and I'll see you next time for more of what's new in FinTech.